If you're looking for a reliable TradingView indicator that 100% works, then this video is exactly for you. The technical indicator we're about to present to you in this video works very well on cryptocurrencies, Forex, and stocks. It shows excellent results on lower time frames, making it suitable for day traders and scalpers. Traders, before we start, please spend 1 second of your time and like this video. By doing so, you greatly contribute to our diligent work. Also, subscribe to Magic Indicator Strategies if you want to see more special content in the future. The indicator we're going to be talking about in this video is 100% free and easy to read. In combination with other tools, its win ratio is 80%, sometimes even 90%. We tested it on the Bitcoin 1-minute time frame and it generated over 500% in profit in just 3 days. We will explain in detail how to use this magic tool correctly so that you can start making profits as fast as possible. Now let's log into TradingView and open the chart of any asset. The way you can install this indicator is by clicking the indicators menu and in the search box typing divergence for many indicators. The one that you're looking for is this one, created by Lonesome the Blue. Before we can start using this indicator, we need to understand how it works. On each candle, it checks divergences between the current and any of the last 16 pivot points for the indicators. It searches for divergence on chosen indicators: RSI, MACD, MACD histogram, stochastic, CCI, momentum, OBV, and any external indicator. Based on the processed data, it prints signals for positive and negative divergence. It also shows how many indicators it found divergence on. The more indicators are displayed on the label, the stronger the signal. We recommend considering a signal that has no less than 2 indicators. As you can see, this indicator alone issues quite accurate trade entries. But we believe the indicator can be improved so that the majority of fake signals become invalid. We found a very simple way to do so. All you need to do is add an appropriate trend filter. For this purpose, an exponential moving average is ideal. So click on the indicators menu one more time and search for EMA. Set its length to 200. As we already mentioned, the EMA you see on the chart will determine the long-term trend direction. If the price breaks above the EMA and it continues to move up, the uptrend is confirmed. During the uptrend, only long positions can be taken. When the price breaks below the moving average and it continues to move to the downside, the downtrend is confirmed. Make sure to only take short positions during this time. Knowing how to read market trends is very helpful. However, there is still one thing I want you to understand. Price doesn't move in a straight line when it's trending. It moves in waves. The pressure to buy or sell cannot be equal all the time. Some traders take their profits, close their positions, resulting in a retracement of the price. Only a small fraction of traders know how to take advantage of this information. This video will teach you the most effective way to enter the market so that you become part of the top 1% of players. So how exactly should you enter buy and sell trades? Well, let's break down the conditions for a long trade. First, the price must break above the exponential moving average. This is a definitive confirmation of an uptrend, as you already know. Second, after a sharp move to the upside, the price must retest the 200 EMA. A moving average often acts as strong support. This fact should not be ignored. Third, the indicator must detect a bullish divergence across at least 2 indicators when the price makes a pullback. When the divergence has been spotted, a yellow label will be printed below the price. This will be your entry point. Place a pending buy order slightly above the high of the current candlestick and wait for it to get triggered on the very next bar. The stop loss should be set below the EMA. Target at least 2 times the risk in this strategy. You can even exit a winning trade manually as soon as the indicator finds a bearish divergence. This way your chances of catching a really massive trend increase a lot. Here are a couple more examples of a buy trade. Watch how the price respects the EMA line. It is not necessary for it to touch the line. The setup is valid even when the price gets really close to the exponential moving average. If during the pullback the indicator finds a bullish divergence on only one indicator, abandon the signal. If you do everything correctly, you will be surprised how effective this strategy can be. By the way, traders, if you're enjoying the content, please leave a like to this video and subscribe to our channel. Okay, now let me explain the rules for short positions. First, wait for the price to fall below the EMA. Once the downtrend has been established, wait for the market to retest the moving average. A bearish divergence on at least 2 indicators must be found when the price makes a retracement. After receiving a signal, place a pending sell order slightly below the low of the current price bar. If the order doesn't get executed on the very next candle, cancel it. Your stop loss should be positioned above the EMA. Target at least 2 times the risk or exit a winning trade manually once a bullish divergence is found in the market. For the minute, we will be giving you more examples of how you should execute trades. Make sure you pay close attention to these examples. We will also teach you how to set alerts for this indicator so that you don't miss potential trades. In order to create an alert, click on the Alert button at the top. Select the Divergence tool for many indicators. You can create an alert for a bullish or bearish divergence. Also make sure to set an alert once per bar close. You will be notified every time the indicator prints a label. Check if the rest of the conditions are met before placing an order.